What's good, everybody, man? Jordan here, back with another video. And in today's video, if it looks like I'm in my backyard, then yes, I'm definitely in my backyard. You guessed right. But anyway, in today's video, we're gonna be back testing. Not sure what pair yet. I'm just gonna jump into it. With that being said, I'm gonna go inside here in a couple of seconds, and we're just gonna get straight into the video. We're gonna get straight into the computer, jump inside. I'm gonna show you guys the strategy that I've been using pretty much, and we're just gonna run everything like that. I might start a series of videos like this. I'm not really sure just yet. Obviously in the beginning stages of things, just trying to figure out, you know, what kind of style of videos I like to do right now. So with that being said, let's get into it. Let's go. All right, cool. Made it back inside, guys. So yeah, we're gonna get straight into it. I'm gonna be back testing EurJpy today. So yeah, I'm gonna move my little box way down here, and without any further ado, I appreciate you guys for watching, tuning in. Make sure you hit that like button, smash that subscribe button if you're new. And I'm gonna go way down here, and let's go. Let's get into it. All right, so we're gonna be back testing EurJpy today off of the 1 hour time frame, and while I do it, I'm just gonna basically talk through it and just show you guys you know, pretty much what I look for throughout the session. So yeah, let's get into it. So pretty much, and also I guess I'll write down the steps and try to, I don't know, try to word it as best as possible. So the first thing that I like to look for is an impulse move to the upside, breaking highs, or to the downside, breaking lows. So in this case, we're just going to look at an impulse move. It doesn't necessarily, it's not going to be the move, my actual move or setup that I'm looking for, but just an impulse move is pretty much, you know, move here, like I said, breaking lows or breaking highs to the downside, and the same color candle, these all being the same color. All right, so I'm just gonna fast forward here. By the way, I'm going from March 1st to April 1st. Again, I'm looking for the impulse move, breaking structure, breaking highs. So, and you know, specifically, I guess we could look for that move to be during the time that, you know, I actively trade, like I said, from 7 a.m. to 10 a.m. Central Time. However, if I see those moves being set up in a different session at a different time, you know, for example, at 5 p.m. in the afternoon, or, you know, during Asian at 8 p.m., 9 p.m. in the evening, then I'll still look at those moves. I'll still back test them and see if they are the same compared to the ones that I see in the New York session. So let's continue. I don't know why I was just clicking the button so fast like that. All right, so boom. Here we have, not here, but here we have a breaker structure. A breaker structure, all the same red candlesticks. And I'm considering that an impulse movement. Now, the thing about trading, and you have to have experience in chart time to realize which moves are stronger than the next move, or which move is stronger than the last move. You know, pretty much I'm following all the same rules here. However, sometimes, you know, when I see wicks like these, you know, I think to myself, okay, just like, what are we rejecting off of? You know, why is this wick showing here? You know, that might lead me to go to the higher time frame and see that, you know, oh, I'm here at the bottom. Or if I go to the daily, which, you know, I'll explain that in a little bit. You know, I really don't see a pattern here on the daily. I do see that we're, you know, here on some lows, sitting, you know, actively as support, but for the most part, I know that we've came up, you know, off the daily, came up to reject, to retest the lows that it broke, and also to continue down. So just the fact that, you know, we did get that retest off of the daily, and that we're continuing down, although we're here, you know, at some support, you know, I can follow my rules and, you know, play the probability game pretty much, and, you know, take the same trade, same risk, and, you know, try to go from there. Yeah, let's take out the fib and see what we see. fibbing from the high to the low because I'm looking for sells. If I were to be looking for buys, it would be from the low to the high, complete opposite. So anyway, looking for price to come up, tap my 382, at least my 382, or the 50 or the 618. Anything above the 786 is invalid. If I get a continuation down here below, then the trade is also invalid. So there's a continuation and close below this area, making the trade invalid. So I would delete this and I would move on. Again, I'm waiting for an impulse break of structure to the upside. I don't really like these wicks. Whenever I am looking for an impulse, break of structure to, to either side, I'm not necessarily looking for any wicks. I just would really like the candle to close strong above this area here, and the fact that it did not, it makes me a little bit skeptical, and for me, it would make the trade invalid. Even though I think, this setup pretty much happened during my session in which I like to look for these trades. So anyway, like I said, it would make the trade invalid for me. I don't like the wicks. My experience, I guess, is taken over a little bit. So let's play it forward. My stop loss, I think somewhere in, if I were to take the trade here, my stop loss would be probably below here somewhere. So not really sure, not really too worried about it. Even so here, I'm still getting a wick, barely closing above these wicks. Not even. So yeah, I'm just gonna keep on continuing. Still, again, looking for that buy above structure during the hours of 7 to 11. And if I could get a good close, a good nice strong close above a piece of structure like this right here, as you can see, this candle, no top, barely a top wick, but a real small one, but nonetheless, it's a strong candle. What time is it? Game time. All right, so 4, and we're gonna keep on playing here. From there, I'll take out my fib. I'll take out my fib. So yeah, second step of my strategy would be to fib the impulse. My bad if I hit the mic, that was loud on y'all's ears. But step number 2, what are those? Would be to fib the impulse. I want price to come, hit the hot zones, hit the red zone, 618, whatever you want to call it, 618, the 50, the 382. You just want to see price form some type of support in this area, giving you strength and confirmation that, price can continue forward. So let's see here, prices hit the 382, hit the 50 actually. So from there, we're going to go flip down to the 15 minute. And honestly, throughout the morning, I'm looking at, once price hits this 15 minute, I'm stuck on the 15 minute unless, hours start to pass, and now I'm looking at the 1 hour for closures and whatnot, 30 minute. But for me in this example, the 15 minute is, where I want to be. So from here, there's not much structure. So, even in this area, I would still look for some type of, something like this. Let me, maybe an M pattern, boom, to continue, or just a little movement like this, not necessarily an M, but just, creating higher highs, just higher highs, higher lows moving forward. So let's play it. I will make note that, if price breaks above these highs here, that will make my trade invalid, and I'll leave it alone. But until then, I'll look for some structure to be broken like this right here. So just like we got this example, it's kind of a tricky one. Nonetheless, it still is an example, because not only do you have, some support being formed in this area here, but now you have price breaking above the area that it formed. And, this is what I'm starting to look for. I'm starting to look for, candles to be closed strong above these structures, above these highs pretty much. And so from there, I can't say for sure if I would set, a whole limit, but things like this, and you start to look at the trend, you're like, okay, well, I think that this is safe, You know, I've been seeing these buys. You have a couple of confluences here. So here I would feel comfortable with taking this trade. If we could just move back one candle, if we were to close like this, I would hurry up, set my limit here above this area. If you want to be, you know, if you're moving a little slower, you could set it here, but I would set my limit here, making my stop loss below this area. And honestly, looking at this trade, just it being a 1-to-2-4 ratio, I don't like it. I don't want to, you know, I really don't want to trade it. If anything, maybe I'll make my stop loss a little shorter, but I don't want to compromise all of my risk, making it 20 pips. Basically, my bottom line is I won't go for any trade that's less than 2R, you know, less than a 2-to-1 risk to reward. So let's play it. Triggered in here. And let me just move back real quick. I'm sorry, I moved kind of fast. But you know, just with experience, and it's not as clear as I would want it to be, but just the fact that this was our structure, okay, and the fact that we had structure, it was now broken, beating this high here, that's my strategy, and that's where I feel most comfortable setting a limit. So if I were to erase that, and at the time, you know, I see this candle close, you know, I have a couple of minutes, you know, I have more than a couple of minutes to, you know, figure out my stop loss, where I want to put, you know, my limit. And I can't be hesitant about it either. So, you know, with that being said, you know, I'm taking my limit, I'm setting it right here, right above this area that it broke here. You know, also, you know, confides with these areas and these wicks here. Make my stop loss, you know, lower than, you know, at least these wicks here, because if it does go lower than here, I mean, chances are you don't want to be in that trade anyway. So, you know, if price were to hit here and then continue down, boom, now your stop loss is being hit, it takes you out the trade. You don't want to be in that trade anyway. The further it goes, the more money you lose. So from there, we would let it play out. That I'm gonna let that play out. Stop loss, let's say 14 pips. I like 20, honestly. So I'm gonna let it play out. You're triggered in right here, and then from there we're getting 15-minute candles pushing upwards, and this is where our TP it hits right here. So from there we're just gonna keep on moving forward. That's the strategy right there. I'm gonna keep on looking for different examples. These aren't pre-examples. Like I haven't looked for these examples yet. Just pretty much trying to back test as I go and record at the same time. So yeah, we're just gonna keep on moving. So even here, I mean, we'll just erase this for the time being. But you know, even here, you know, this is the impulse move. You know, if you're having trouble, you know, recognizing what an impulse movement is, you know, always take the time out of your day to go back and back test, look at some extra videos, and, you know, really try to get a grasp on, you know, the impulse moves, if that's, you know, if that's your area that you need to practice. So from there, what are we doing? Step 2, we're fibbing the impulse. Let me slow down. Fibbing the impulse. Step 3, you know, and I don't really want to get too technical, but, you know, step 3, I'm waiting for price to come up to the 382, to at least the 382. At least 380, in between the 382 and the 618. Anything above the 618, I'm sorry, not anything above the 786 or below the 786 in this case is going to be considered invalid. Why is it invalid? Not only is it below, you know, a stop level for me, but you get any lower and, you know, we're starting to go below these lows here. Once we start doing that, we start flipping structure, and, you know, now we're looking towards the downside a little bit. So from there, you don't want to waste too much of your time, which is pretty much why we have all these rules. So Lego. can't skip number 2, right? Gotta fib the move, gotta fib the impulse. The thing about these impulses is that if they don't come straight down most of the time, I usually don't like to waste my time waiting for them. But, if they don't come straight down, then chances are, price might consolidate. You might hit a couple of news articles here. Or news, might drop here. But, price just gets squirrely, man. Price just starts to range right here a little bit. And then boom, 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 you get whipsawed. And it's like, you don't want to waste your time looking for those trades in that area because, why else are we going to have these rules? The more that you do this and the more rules that the more you do this and the more chart time that you have, the more that you're able to recognize your rules, quicker and faster, and you're able to decipher whether or not you want to, mess with this trade or not. So we're going to continue. And now we're getting this move to the downside. We've got an impulse move, same color candles to the downside. The only thing is when we fib it, it seems as if it never came back to the 382. And it did come back to the 382. At this point, man, and you got to look at your times too. You don't want to sit in the charts all day long. At this point, it's 12 o'clock, 1, 2, 3 in the afternoon. And at this point, we're starting to flip sessions here and, moving into Asian session. You definitely can't mess around too much because, like I said, if you're stuck here and you're just looking at the charts all day long and you're like, damn, okay, boom, now it's hit 382, you don't have enough experience to know that after 12 o'clock, maybe price starts to slow down a little bit, things start to change, buyers and sellers and different buyers and sellers start to enter and exit the market, and you don't know that yet. So that's why we have these rules, pretty much, 7 to 11, 6 to 10 within that window. I think there has to be an entry. If there's not, you don't want to waste your time, too much chart time. You're gonna stress yourself out. So that being said, even here, let's move on. From the 1 hour, we've gotten a break. This would not be in my trading window, but at the same time, it is showing my move. So what we see is this impulse move back up to the upside, breaking this structure here. Also breaking a little bit of these lows. Boom. Also breaking this area of resistance now turn support. So what we would look for, after we see the impulse, we fib the impulse. We know that prices, come up, broken this area here. It's coming back down to retest it, which is perfect because we're hitting at least a 382 and we're hitting a little bit of the 50. So with that being said, we're going down to the 15 minute and we're seeing what's going on. Can we form a true area of support here? So let's find out. So we got a little bit. We're getting a little bit. So from here, it's 2, 3 o'clock in the morning, depending on which time zone you're in. Either way, whatever time zone I'm in, I'm looking for this area to be broken. Why am I looking for this area to be broken? Because like the last example, we have structure within the 15 minute. These are areas of structure, and this is also what I meant by we need price to form some type of support around the pullback hot areas, the 382, 5, the 50, and the 618. We need price to form some area of support to be able to break the structure and move towards the upside. So without any of this, we have nothing to go for. We have nothing to go after, pretty much, or nothing to go about, because we don't know whether or not we want price to break the highs if there's no structure. So with that being said, we're waiting for price to come up, candle to close strong above this area here, and we'll wait. Boom, we got the close. The very next candle too. So from here, what am I doing? I'm setting a buy limit at this area, and this area, all giving me confluence to set my buy limit. So I'd set it right here, right on top of these wicks. I'm not going for the bodies, but I would set my limit, right there on top. Go right into the MT4, put it on in, 20 pip stop loss. Your TP is always at the -27 with a 2 risk to 2.1 2 1 risk to reward, 2 to 1 risk to reward. Jesus. And we're gonna wait for me to be triggered in, and you're triggered in. We're triggered in right here, and from there we let it play. A little bit of drawdown. Don't get scared. A little bit, boom, and then we hit TP. We hit TP. Okay, so, and that's the crazy thing about it, you know, with like experience, at least in my trading game, my career, and my journey right now, that area, and this is why also, you know, I also try to remember so much. Again, shout out Bud, because leaving the charts for 15 to 30 minutes after you've been triggered in, you know, I think that's a huge gem. I think it's a huge secret that, you know, a lot of people might not take into consideration, because let's go back a little bit. And when you talk about like the psychology of, you know, trading, you start to wonder, you know, why is it that, you know, you see so many people quit, and, you know, why is it that we start hearing about, oh, well, this strategy doesn't work, this strategy doesn't work, and I tried this, that, and the third, and man, I just quit. It's because, you know, people get into these drawdowns and they don't understand that a drawdown is a part of the game. So with that being said, I'm gonna play it forward, try to keep it slower. So again, this is where I'm triggered in. Price comes back to retest entry, drawdown. That's 15 minutes in drawdown, another 30 minutes in drawdown. It's 45 minutes in drawdown. That's an hour in drawdown. Now we're just getting back in profit into an hour. So like, if you think about, and I went through it as well, if you think about the psychology of just drawdown, you know, no one really likes to see their account in the negative. They don't like to see, you know, red in general, especially, you know, if you're new to the game and you're just coming up in the trading world. You know, we never like to see drawdown. So from here, you know, I can admit that, you know, back in the day, a couple years ago, a year and a half ago, I'm closing it right here. I'm closing it right here to protect my assets, to what did I call it? To manage risk. I think I called it like managing risk. I was like, yeah, I'm just gonna manage risk here, and then, you know, I'm gonna let it drive. If it drives, it drives. Blah blah blah. So I would have closed, but like not in today's world. I'm not doing that. So from there, I guess my bottom line is, you know, drawdown is a part of the game. We have our risk to reward parameters there for a reason. My stop loss is here for a reason. And you need to be able to trust that, and trust the strategy, and trust yourself. So like I said, I'll let it play, and then, like I said, price hits TP. And this is what it looks like from the 1 hour. And actually, price went to go and hit 70 pips too. But as always, and you'll hear it time and time again, you don't want to be greedy. You know, set your area where you want to get out, and get out the market. 42 pips is well over enough to, you know, make a little bit ends meet, make a little bit of money. You know, it's $1,000, it's $2,000 for somebody. We could all use it. So let's erase this one. And I did say, I think I wanted to go to the end of April. I'm sorry, the end of March, which will be the beginning of April. So we're just gonna keep these right here. We're gonna keep going. And that's the thing about these impulse moves, man. Like, just having a strategy in general. You know, you have these rules here, and these, you know, you take them and you follow them, you know, one by one, step by step. You start to find these nuances that work for you. You know, you start to find these times that work for you. The fib levels, the fact that you don't like to see wicks, you like to see strong closures below the ranges. You know, these certain things that they just start to work for you. And when you're able to compare some of the people who use the same strategy, you know, you find that y'all are all winning in a sense. And then you look at the people who aren't, and, you know, you see some of the stuff you're doing versus some of the stuff they're not doing, and then, you know, it's kind of like your confluences on the charts. You know, it just adds up. It adds up. So as you saw, as I was doing all of that talking, you saw that price came up, you know, also retested the low that it broke here, boom, came up, made the trade invalid. Did this hit the, let's see. almost came and closed above the 786. I mean, if I make my fib even more precise, I mean, we could say that it came and closed right at the 786. And this one definitely closed above the 786. So what happens then? It makes the trade invalid. Makes the trade invalid. But yeah, guys, if y'all made it this far in the video, make sure you hit that like button and let me know in the comments if you like this type of style of video, because I plan on doing them more regardless. I can only get better, I ain't gonna lie. So yeah, here's another impulse movement. However, we do have a wick here. It's not these big wicks that you see here that make me kind of nervous. They make me uncomfortable. You know, other people, you know, you might not get too nervous. You might not get too squirrely over these over these wicks. But for me personally, I like to close. I like to close strong candles above the structure. So with that being said, what are we doing? Step 2, we're fibbing the impulse. Fibbing the impulse, waiting for price to come down below. And you know, I'm gonna add this right here. We're gonna fib the impulse and ... Oh wait, I already wrote that. I blame my dogs barking in the background. But anyway, after we fib the impulse, we're waiting for price to hit 382, at least in between 382 and the 618. Once we do, we're flipping down to the 15-minute, and we're waiting for structure to form. Maybe that's the next. Maybe that's number 4, right? Fib the impulse, wait for price to form around 382, and we're going to wait for price to form support or resistance. Is that how you spell resistance? Is it with an A? Can't type. There we go. The keyboard was loud anyway. I didn't really want to retype that again. So we're gonna flip to the 15-minute and we're gonna see if price will form any type of support. Try to take it slow. Okay. We've gotten boom boom. Now maybe we look for a W. We're starting to get it. Just take a note what time it is at 7:45. This is prime. I like that. This is a prime time. Don't get confused at this area here. You know, we're focused on this area here. I should have did that a little sooner, a little quicker, but we're focused on this area here. Why? Because not only is this a part of the structure that needs to be broken, that needs to be beat by the price for us to continue forward, to continue up, but this is also the M-type pattern that I'm looking for. I'm looking for price to beat these highs because this is the structure that is formed now that price is down here. Because price is down here, even more so would like structure, would like price to break this high and to continue forward. So let's play it. Oh, almost got it. And there it is. Right here. All right, so, and this is the, I'm sorry, it moved a little fast right here, so I'm just gonna rewind it. Kind of paused, almost confused myself for a second, but this is the structure that needs to be broken, right? Should have made it a little bit smaller, just like that. That was the structure that needed to be broken. But where was it broken? It wasn't broken with this candle or this candle, but it was broken with this candle and also closed above. Okay, is also closed above. And this is where, you know, the experience and the trial and error comes, because some people very well may have thought this could be the close above, or this candle would have been the close above. You know, however, you know, I like for things to be a little bit more precise and a little bit more clear for me in my eyes. So I would have just waited for this to happen, you know. And even if you were to set a limit, it would have been a really quick limit that you would have had to set for 1, for 2. You know, I guess you would still technically be in a little bit of profit here. So with that being said, since we got the close above that area, I would take my limit. I would set it below here. I like 20 pips, man. I mean, we can go here and make it 28 pips just to be safe, but we're looking for a 60 pip TP with a 28 pip stop loss. And again, we got to make sure that we're always reaching for 2R. We're always reaching for a 2-to-1 or higher risk to reward. but it's always good to start at 2 to 1. Just stay there, and you won't get too greedy. So let's see. So we're triggered in here. This candle, this red candle. From here, I'm moving my stops to break even, just in case price decides to come down, turn around, and go the opposite way. It'll be no harm, no foul. My trade will be break even, and it'll take me out the trade. If it goes the opposite direction, I don't want to be in that trade anyway. And break even. So there's your break even point. No harm, no foul. We're finished. We're finished with that trade. You got a little bit of profit here. You could take profit here, or you could wait for price to hit TP here. Me personally, I would wait for price to hit TP here, because that's part of my plan. And if I deviate away from my plan, then I'll start to deviate away from my plan more and more throughout the future in my trading career. So with that being said, for this trade, you got a good 30, you got a good 40, depending on your plan. If you broke these highs and you decide to close, that's on you. You take that profit. Great trade. That's a good trade. However, even though I closed, no, I didn't close, but even though I went break even here, I'm still comfortable with that. And that the fact that it did go break even, I'm still comfortable with that. So I guess my main bottom line is follow your plan and just trade it. Try not to deviate away from it just because you see a certain amount of money start flowing into your MT4 account. If you have to go break even, then go break even, because that's a part of your rules. But if not, and your part of your rules is to take profit after you get that 1-to-1 risk to reward, then take profit, live with that and move forward and do the same thing next trade. So let's move it. All right. So we're in the middle of March at this point. We've gotten another impulse move to the upside. Closed candlesticks, no top, no crazy top wick. All of the candles are the same color. Number 2, we're fibbing the move. We're fibbing the impulse from the bottom to the low. From the low to the high, because we're looking for buys. Moving these over. We're waiting for price to come down, hit the 382. And price definitely comes and smacks the 382. From there, it doesn't close though. And this is weird. This is super weird. I would definitely stay out of this. Not only would I stay out of this because it's around 3 o'clock in the morning, and technically I'm still asleep. But it's just the fact that these are weird. This is a weird move for me. Personally, if someone else could trade it, I'm sure that they could. We start making higher highs and higher lows, anybody could trade it. But in this case, we don't. In this case, we definitely don't. So let's go back to the 1 hour. Let's delete this. Let's move these. And let's continue forward. The main thing, again, if you made it this far, the main thing, we also have to take into consideration are the higher time frames. I think maybe we, talk about that, in another video, but the main thing that are sparking these lower time frame moves are the higher time frame moves. So, if you needed a pullback from these areas, all these greens, these are green days. Each candlestick is a day. So every day buys are happening. Every day people have different strategies to take advantage of these buys, all dictating from the higher time frame. And I don't want to get too far off into that. Maybe I'll have to make a part 2 for that, but for this time being, for this little excerpt, always stick to your higher time frames. The higher time frame moves will dictate the lower time frame moves. So if you get a pullback on the daily and you're at this area, you just broke resistance, it came down to retest the resistance on the daily. Now you can go on to the 4 hour or the 1 hour, and start to look for those lower time frame moves. Not saying that that's what's happening here, however, always want to stick to the higher time frame. Gotta be able to back test the strategy, see what it's looking like on the higher time frames too, man. I know. Little by little, I recognize these moves, and if they're not a part of the daily move, then I really have to leave them alone. If you think about it, capital preservation is the name of the game. So, without the capital, can't make any money. So we're gonna keep it going forward. Again, I'm gonna go to the end of March, and then we're gonna cut it. Let's see. Okay, we got another impulse. Where's our rules? Did we delete them? I think I deleted them by accident. That's so funny. All right, here are the rules. These are the daily ones. Is there a dog in here? No, there's not. I thought there was my dog name. Okay, but anyway, we got the impulse move. All right, just try to remember the rules here. We're gonna fib it. Boom, boom. Fib the impulse, and then what? And then we wait for the price to come back down to at least the 382. At least the 382. And there it is. From there, we're flipping to the 15, waiting for price to form any type of support, form some type of structure for highs to be broken. In this case, I'm looking for these highs to be broken. If they don't get broken, then my trade will continue to be invalid until it does. Let's see. And there it is. There's the break. If you can't see that, you get you some glasses. Here's the break. That's where I would put my limit. We're gonna thug it with a 25 pip stop loss. And actually, we're gonna move it up just a little bit to make it a 2-to-1. And I told you I like 20 pips, man. So that's definitely what we're gonna do. So we're gonna make it like that, 2-to-1. We're gonna let it play out and see what happens. We're triggered in the market here. And a little bit of profit, and we're stopped out. And you think, and you're just like, maybe at this point you're asking yourself, why did we get stopped out? Well, let's look at the rejections. Rejection here, rejection here. Let's delete this. Rejection here, rejection here, rejection here. Now, and this is what I was meaning to talk about earlier when you flip to the 1 hour time frames while you're in some of these moves, because if you're in a move, right, you're in a move to the buy side. If you're in a move to the upside at this point in time, seeing these wicks here, the fact that they're rejecting multiple times is a clear indication that maybe you need to flip to a higher time frame, see what other areas is price rejecting off of, and then maybe, just maybe, you close the trade. Or you recognize that price is rejected off of it on a higher time frame, or maybe you don't even take the trade at all. Maybe you don't even take the trade at all. For this obviously, is an L, is a loss, but that's where risk management comes into play. If you take some of the past trades that we've won, it's about 80 pips. However, in this trade, you just only lost 20. At that point, it's a 1%. You always want to risk, at least, not at least, but 1 to 2% a trade. You can always risk a little less than that. So even if you lost this one and you were to risk less, say you risked 0.5% at 0.5%. Instead of risking the whole $500, $600, now you've only risked $200, $300. And the last two trades that you've taken, maybe you've made 1,000, maybe you've made 2,000 or 3,000. So the fact that you just lost 200, 300, it's a small loss over, compared to the bigger wins that you've taken. So always, don't let the losses, fool you. Try to treat the wins just like you treat your losses, and I think they'll come a little bit easier. At least that's what it's been like for myself. I guess I could be talking to myself here, but yeah, that's definitely something that I've noticed in my trading career so far, is that the harder that I take the losses, the harder I take the wins. I'll get hyped up for the wins. It's not so much that too much anymore these days. I might fall into some bad habits, rarely, but the fact of the matter is, when you take a win, it's like, all right, good job, you deserve that win. Take it for what it is, write it, journal it, and move on to the next one. Because if you sit there and you go celebrate and you go buy a bottle of champagne, whatever, and next time then you go lose, the next trade, it's like, wow, damn, you know, you feel a lot worse because when you won, you went to go buy that bottle of champagne. So now when you lose, like, what am I going to do? What's my coping mechanism? So, you know, always try to be easy. Be good on yourself when you lose one of those trades. Don't overreact, don't overtrade, and always try to continue to, you know, just follow the plan. Always try to continue to follow the plan. Where are we at here? We're on the 18th. Let's see if we get a price toward a little push down. Nope, no push down towards here, and that's why we have the rules now. That's always why we have the rules, because honestly, if price doesn't push down, break these, you know, we're not taking the trade. The trade's invalid. The trade's invalid. You know, something to note here is the fact that price has came here to this area 1, 2, 3, 4. I'm sorry, 1, 2, 3, 4, 5, 6, 7 different times. Can I count? 1, 2, 3, 4, 5, 6 different times, not 7. 6 different times, and it hasn't broken yet. So if we're here and you see this, you know, maybe you realize what's going on and you wait for a complete and utter break and close above this area. If you don't get it, you know, maybe you start looking for sells. So let's see. And here we are definitely in a bit of a range. A bit of a range might take us to April. Yeah, this is tough. This is tough. Okay, we're getting a nice little trade on Monday. That's another thing. I don't really trade on Mondays either. Mondays and Fridays, I'm off. I'm off. Let me get my profits in Tuesday through Thursday. So what are we doing? We'll see the impulse, a little bit of wick here. We're gonna fib it. We're gonna fib it out, see where price comes down to. We get this touch here, and then price instantly takes off. So more likely than not, we probably did not get a crazy good entry on this one. No, we definitely didn't. And even if so, you know, you have to watch out for these risk to rewards, because, you know, if you're not getting 2R, then you really don't want to put yourself in that, you know, you don't want to put yourself in that situation, because, you know, you don't want to, I guess if you're okay with the 1-to-1 risk to reward, then so be it. Take it. It's like giving, you know, it's like going to the casino and, you know, $20 wins $20. You know, I'm more or less in the mindset that I want to have $20 make $60 or $20 make $100. So, you know, that's why I kind of say, you know, watch out for the risk to reward, because, you know, it might not, it could be a trade that you could leave alone and you didn't have to take that risk at all, and you wind up losing the trade, but because you didn't follow the 2-to-1 risk to reward setup that you had, you know, you kind of risked it anyway when you really didn't have to. So let's see. So here we got a little bit of structure being broken. We got this little area here. I don't know. I mean, honestly, if this drives, it drives. Well, you know, we could plan it like this. 30 pip. TP, 15 pip stop loss. You know, it's right at 2-to-1. You know, we could plan this. I honestly don't feel that comfortable with it. Structure, however, did break. If you go to the 5-minute, oh my god, I think it just killed me. Yeah, it definitely did. Gotta love when TradingView does that, right? Damn. Probably gonna have to cut. Like I said, you know, you could very well, you know, maybe put your it kind of cut off on me, but I mean, you get this close above here, you know, maybe you could put your buy here, and then your stop loss down here. We could make it 20, even though that's not below, so we'll just stick with below the structure at the 24 pip range, and then from there, you know, you're triggered in here, and then you get an instant move, and then TP. At this point, it'd be 25, you know, for 24, and I'm not okay with that. And that's pretty much, you know, I guess that's why I brought it up, because I could kind of see it in hindsight happening. You know, you take these buys and it's almost like you're buying a little too high. However, you're still making the pippage and you're making a little bit of money. However, it's all about what's your rules, you know, what are you implementing, you know, for yourself. If you're able to stay disciplined behind that and follow that, then, you know, I think that we can all be successful. However, it's like when you start deviating away from the plan a little bit, to try to catch every single move. You know, you could damn well catch this move. I could say, hey, market execute you know, press the buy and you'll make yourself 20 pips. You'll win 20 pips, you know. However, I can't do that for myself, because if I do it here and I see another trade that kind of looks like this, and I'm like, okay, well, I'm just gonna market execute here, then I'll start doing it on too many different trades, and I'll have one strategy, I might think it might be over here, then I'll have another strategy, which is this one right here, and it's, you know, it gets too complicated at that point. And in trading, you don't want to complicate this shit, man, because yeah, we've all been through it. So with that being said, let's go. So we got 22nd right here. The video is probably gonna be kind of long. Boom, got the impulse move up. We're gonna fib it, see what it's looking like. Wait for that price to come down, hit 382, see if it ever does, and it does. So we instantly go to the 15-minute, see if price, no, that's what I thought. I was gonna say, see if price comes back down with that big push right here. It's kind of tough. So from there, it makes our trade invalid. We're going back to the 1 hour, seeing what else we can find. Let's see, another impulse movement. And I remember this run, this huge bull rally that EJ was having last year. It was crazy, man. It's almost like buys just couldn't lose. They couldn't lose. I mean, you could have closed your eyes and pressed buy and you would have made money. So we saw that price came pretty close down here to 786. Didn't close though. Gave us a huge wick on the 1 hour, flipping back down to the 15-minute. Let's see if we can create some type of structure, you know, within this area here. Let's see. Okay, so we've come down, we've broken this area here, we've created some type of structure above, you know, in here, a little bit of support in this area, in this range. So from here, I'll be looking for, you know, if I was here, I'd be looking for price to come up and break, you know, this area here, this junction. So from there, you know, I'm waiting for the body to close, and there it is. So if I see this candle here, honestly, I'm putting my limit down here, and that's just me. If it doesn't hit my limit and drives, then that's just the way it is. If it does hit my limit and drive, even better. But if it doesn't, then I know what's going on now. Then it's all good, and we're still in the right vicinity. We're still there. Oh my god, and there it is. I didn't even see that, but I was looking completely somewhere different. So there it is. We don't want this trade. All right, this is way too high. And this is where I was, you know, talking about where you have to start looking at the higher time frames, because, you know, when you're at this area, when you're this, you know, when you're at this high in the past, and you start looking at past highs and all-time highs, you know, you start to have to, you know, wonder, when is this gonna slow down? When is this you know, when is this rally gonna end? And from there, you start to think to yourself, okay, well, you know, I'm starting to look at these technicals. I see that the all-time highs have hit here. You know, when are the sales gonna come? And you know, we start to go against a little bit, not necessarily the trend, but when you start to look for so many buys over like a long period of time, you might forget the fact that you know, this currency still has to have a pullback. So, you know, when those pullbacks happen, maybe news involved, it might not be news involved, but you know, when they happen, it's like, it's kind of an understanding that probably was the higher time frame move. You know, just the fact that this was, you know, huge rejection here, you know, that very well was, you know, this engulfing 1 hour candlestick right here, you know, and then possibly we could get another push to the downside after this, which is exactly what we get. Why? Because we've gotten the daily push up for so long, we've beaten all-time highs here and here, you know, always looking to the left, that, you know, we're starting to get some sellers into play, and you know, and that's what happens. You know, what goes up must come down, and this is the cool off moment, you know, that higher time frames could show you. And because you're looking at the higher time frames, and then that they're showing you these different things, you're able to, you know, pass up different trades and take trades based off of the higher time frame moves and the pullbacks. So we're right here, March 23rd. Keep it rocking. Definitely a lengthy video, but it's all good. Hopefully hopefully I got some knowledge into somebody today. So here we continue with the trend, and that's something that we always like to see. When you go to a higher time frame and you see that, for months or maybe not months, but for days you've been buying, just buys. Higher time frames been telling you buys. Then if higher time frames are telling you buys and you start to look for sells, then at that point you're kind of going against the trend a little bit. Also knowing that, higher time frames, they hold the power. So when you see it break highs and it comes down to pull back, then and you can have a little bit more confidence in you that, price is going to continue from there. So, even from here, even though that this is a small impulse movement, you can still fib this out and see what's going down. So you hit it right here. Honestly, I would stay away from this one. I'll stay away from this one because you have one nasty wick here, one nasty wick here. Me personally, I don't like wicks. I don't like wicks. They make it difficult for me. If it drives here. It's way too much. It get way too sticky for me. 3 o'clock in the morning, 4 o'clock in the morning, I'm not even trading yet. I ain't even awake yet. So, and if you go down to the daily, you might not see these, you might not see any patterns. And the fact that you might not see a pattern, could very well be why you don't see a setup on lower time frames. So, from here, and just knowing that, we've gotten these rejections in the past, taking these trades right now, I mean, it'd be really risky in my opinion, because we know somewhat that these moves are kind of fundamental. Just remembering the time that this was going on, it was just it got fundamental, and huge spikes were happening. People were dropping currencies here, resulting in EurJpy just straight buying for days. And sometimes that's the case, and sometimes it's not. Here we still got our impulse. We fibbed it. Price came down, continued up, making our trade invalid, beating these highs here, coming back down to retest. And then just making these squirrely movements. You come down, you break. I guess this is it's a regular movement. You get a lower low. You don't necessarily get a lower high. There's the higher high, but then you come back down and you make a freaking lower low. Man, it's just all confusing. It's all that makes price range. It makes price range. You get these wicks here, wick here, wick here, wick here. Me personally, I'm staying away from that. Again and again, capital preservation is the name of the game. So, why would you waste your money trading in a range? I've never really had any good success trading in a range. And if we don't know what a range is literally when price is going, from up to down, just banging from side to side, upside to downside, not really having any clear direction or breaks or closures above, either a high or a low. So, that's what I like to see pretty much. I like to see the whole thing break. No ranges for me. It never ended up well. I blew my accounts within the ranges, and it was just trash. It was trash. So we got a Sunday open here. Let's continue. Nice big move. God damn. This had to be 2 o'clock, 3 o'clock in the morning. Had to be news induced. We'll fib it out anyway. This might be the last example as well, but we got the 15-minute going. Okay. Got a little bit of structure in here. We'll see what else it does. Let's see, 4:45, just waking up. Got some structure in here. So if I were here, I'd wait for price to come and break this level here, and then I would set my limit. But we have rules for a reason, so we're seeing price break. We're gonna see what it does. Let's see. Can we get it? Nope. No, we can't get it. Yep, prices definitely came down here, started breaking the lower lows, also making lower highs. So yeah, lower lows, also making lower lows. but that makes our trade invalid. You know, came here to tap the 786, not necessarily closing below, but there's your closure below, you know. And if there you want to continue to wait for price to flip, then I mean, you can do that. But the fact of the matter is, you know, are those within your trading hours? You know, maybe not. For me, at this example, it's not within my trading hours. So if I get around lunchtime and I start seeing price flip, I'm like, holy shit, you know, I've been waiting for this move forever. And like, say I'm looking for, well, yeah, I am looking for buys in this case, you know, and I see this move here and I set a limit here, then it's like, why did you set that limit? You know, you've been on that charts for 6 hours. You know, this is never within your parameters. You know, a 40 pip stop loss, that's not me. I'm more of a 15 pips, 20 pips stop loss guy. So, you know, when things like that start to break the monotony and break your rules of things, you start to realize, and you know, which trades to, you know, kind of stay out of. So that being said, I think that was the last one. We're gonna play it out. I think we got to the end of April here. Almost, not really. It's just, I don't remember, like there was a few moves in there and there just wasn't much going on. It's just super rangy, and I mean, if you can't see it, then, you know, I'll make this a little bigger too. Like, this is really rangy. This is rangy. I've never really had any great, and this is the 15 minute, but still, I've never had any great, you know, success in the range. And this is it's only a 1 hour range too. It's not like any crazy 4 hour range that's been going on for days on end. You know, at this point, you know, honestly, I'm curious to see how long this range lasted. Hold on. Because I low-key remember this. It was just back and forth, man. It's brutal. It's so hard to trade in that. So it's like, and then we're back in it. And then you're just back in it. And we definitely are in April this time. At this point. Can we get a break? Can we get a break so we can end the video? Because there was at one point, it was a break. It was crazy buys. And then nothing. Look at that. And then nothing for days. For days, there was nothing. Let's go to the 4 hour real quick. For days, it was nothing. And then we got a little bit of the test. A little bit of a test. And then there we go. There's the break. There was the break. And then you start getting sells all over again. So yeah. There y'all go. We've made it to April. That's pretty much, you know, the strategy. I think I'm gonna have to make like a part 2 or something like this. Honestly, this video is mad long. But if you did somehow make it to the end of the video, make sure you hit the like button. But no, I honestly hope somebody could, you know, learn something from this. You know, and have, you know, a couple of things that they could take away. You know, not necessarily the whole strategy, because I feel like it was kind of confusing in a couple of parts. So, you know, that's why I have to make a part 2, and I'm gonna make a part, you know, 3, and just over time you'll start to adapt and realize, you know, pretty much the moves that I make, and how I make them. You know, I think one of my hardest things that I had to go through was the 15-minute entry system. You know, I think that was one of the hardest things to grasp for me. So hopefully, you know, I can make that a little easier for somebody else. And yeah, we could just, you know, trade off of each other like that and run it like that. But anyway, with that being said, you guys, if you guys made it to the end of the video, make sure you leave me a comment, make sure you subscribe. Thank y'all so much for watching, tuning in, and make sure you got the notifications turned on, because sooner or later we'll be going live, you know, just to pretty much practice that. But only time will tell. And just like these charts in the range, time will tell. So make sure you guys be patient, stay safe, learn strategy. Again, thank you guys for watching, and I'll see you guys in the next video.